Earlier this morning, drug maker Eli Lilly beat fourth quarter earnings estimates. Bloomberg's Shannon Pettypiece is right here in the newsroom, and she is joined now from Indianapolis by the CEO of Eli Lilly, John Lechleiter. Shannon?
Right. Well, Eli Lilly reported earnings today that exceeded analyst estimates, but 2011 is shaping up to be a challenging year. The company's had a string of setbacks at the FDA and is facing pricing pressure in the U.S. and Europe. Now, John, you've said in the past no big mergers or acquisitions, but have any of these recent challenges changed your thinking on doing a large deal?
Shannon, the challenges we face are not new. We've seen these coming for some time. We feel we're well prepared to meet these challenges, and we remain committed to our innovation strategy. We remain opposed to a large-scale combination.
Well, what size deals are you looking for? Because I know you have said you are interested in doing some acquisitions.
Certainly, I think you can look back at 2010 and look at some of the deals we did. We in-licensed a product called Axiron from an Australian company. This is a topical application of testosterone for men who are testosterone deficient. That has since been approved by the FDA. We'll be launching that product later this year. We also acquired a product called Liprotamase from a company called Alnara. And at the very end of the year, we purchased a company called Avid, which has a radio imaging agent to detect amyloid plaque in the brain, florbetapir. That was just the subject of an FDA advisory committee meeting last week. So we're working to aggressively in-license molecules like this to supplement what's going through our own pipeline, where we have nearly 70 molecules in some stage of clinical development. And of course, as you know, the big deal in recent days has been our announcement several weeks ago of our partnership with Boehringer Ingelheim to develop a series of potential new medicines to treat diabetes. This is a very strategic, long-term global partnership.
So a lot of focus there on biotech. What about animal health, though? I want to ask you about that specifically because Merck and Sanofi have some assets out there for sale. Are you interested in expanding your animal health business? I know it's a big business for you.
We are interested in expanding our animal health business. We're the third or fourth largest size player in that category, but for the past couple of years, we've been among the fastest growing. We have a companion animal line of business that's doing very well. And as opportunities come along, Shannon, for us to look at purchases or acquisitions, we will do that. Keep in mind, last year, we bought the assets in Europe that Pfizer and Wyeth had divested when they combined their animal health businesses at that time.
Well, I want to also ask you about your dividend. Are you going to be able to maintain that through this patent cliff you have coming up over the next several years?
We remain very committed to at least maintaining our dividend at its current level. That is one cornerstone of our strategy. And as we look out and at the pluses and minuses over the next few years, we remain very confident that we're going to be able to continue to pay that dividend.
Would you consider cutting the dividend, though, if it meant paying for a large-scale acquisition or something that you really think would help supplement your pipeline? Is that something that's on the table?
Shannon, at this point in time, maintaining that dividend comes first. We'll look at potential business development opportunities in that light. As I said again, we have no interest in large-scale deals or combinations. We feel that we can meet our needs and the needs of our shareholders by doing the kinds of deals we've done in the last year or so, and again, supplementing a strong internal pipeline.
And just a final second here, health reform, you think we're going to see some changes there this year?
It's difficult to say. Certainly some provisions of health reform kick in this year and will impact our bottom line. This year, Lilly, along with the rest of the industry, begins paying a fee. We estimate that's going to cost us somewhere between $150 and $200 million on the year. In addition, we begin to help seniors bridge the so-called donut hole in the Medicare Part D coverage. We're running our business on the assumption that these major provisions will not change. We're obviously watching developments in Washington very carefully.
Well, thanks very much, John. We're going to have to leave it there. Deirdre, back to you.
Shannon, thanks very much. Shannon Pettypiece there with the CEO of Eli Lilly, John Lechleiter.